Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from thetechnicaltraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Oil today briefly went over the $75 mark. Did it last long?
You know, $75, it's one of those, it's kind of like a whole number, meaning every $5 or every $10 in a stock price or commodity price, it'll act as resistance. And $75 has kind of got a lot of different meanings to it. It's, you know, it's 3/4 of a way to 100. It's a very solid number. It's just a level on the chart, more or less, that I think a lot of people in their minds were targeting, saying if it could hit $75, I am going to be selling some position there. And more or less, it popped up to $75 today, traded above it for about 30 minutes, and then huge volume stepped in, and people started unloading shares. Whether news hit that created it or whatever it was, we saw massive selling volume, and of course we saw a drop all the way down to about $2 or $72.75. So pretty significant drop intraday. And that just goes to show that I think the technicals are definitely at play. Crude oil, we've talked about this, is in a bull market, and when something gets overextended or hits a technical level for whatever reason, the short-term traders are in there playing these moves very aggressively, and that could have very much so been what took place today.
Also, one of the factors with the price of oil, one of the Alberta oil sands plants had to shut down because of storm damage, so they'll be offline. And in Texas, they're also finding that their pipelines are at capacity and they can't get their oil out. How does that affect price? Yeah,
well, that could definitely affect pricing going forward. But, you know, in the grand scheme of things, oil is in a screaming bull market, and sharp pullbacks like this, you know, there's bullish news for crude oil, and any type of news that happens with a straight down, high volume kind of spike, either to the upside or the downside, is usually negated a couple of days later. And really, the big drop we saw from 75 all the way down to 72.75 today, half of that move's already been given back in the last 2 hours. So obviously there was a big technical level, and I think the news is bullish for crude oil. I think these dips will get bought up. They have been for the last couple of weeks, and I think there's going to be an upward bias in crude oil to continue going. It has had a nice move. I wouldn't be surprised if maybe it consolidates a little bit for a week or two, but I mean the overall trend for crude oil is up.
What's happening with natural gas?
Well, natural gas has had a slow climb really from February. It had a huge crash in January, February, and it's just been slowly grinding its way up. And yesterday we saw it have a more or less a technical breakdown on the daily chart. And what we're actually looking for here is a 1 or 2 day pause, maybe 3 days here on natural gas before I think it's going to continue to go lower. So I think we could see natural gas trading at $2.87 right now. I think we could see that drop all the way down to about $2.75 or $2.70, which is going to bring us into a previous support level from back in May. And by the time I think it falls down there, we're going to have a short-term cycle low for natural gas to actually have an upward bias. And the fact that it should reach a support level will naturally act for buyers to step in and buy at that support zone. So I am bearish on natural gas. It's hanging on a limb. It's on the verge of another leg to the downside here. Nothing significant percentage-wise, but as a short-term swing trader, position trader, I think we could see it be under pressure for really a week or two going forward.
We'll have more with Chris Vermeulen right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening in the precious metals market?
Well, precious metals, gold specifically has been beaten up really hard. It has been trending lower pretty much all year. And we keep pushing down to these new lows, it seems, every other day. Yesterday we saw a fairly sharp bout of selling in gold, and today we're seeing a very sharp kind of reversal bar to the upside, along with in silver and miners. But in the grand scheme of things, money is just not interested in precious metals at the moment. Investors or traders are holding on to gold miners, though gold miners are outperforming the physical metals themselves, which is a bullish sign for the actual physical metals of gold and silver. We tend to see gold miners hold up, and when they outperform the physical metals, we'll usually see the metals find a bottom shortly after. So I think we're getting really close. I still have another potential 2 weeks here of precious metals being under pressure before we have the next significant cycle to the upside, where we should see a buying bias to the upside that should last a couple of months. So I think we're coming into a strong time for precious metals, but it's going to be choppy here and continue to kind of carve out a bottom over the next 2 weeks.
Many people have said the stock market is in trouble, and why wouldn't people be buying gold right now as a hedge?
Yeah, it's tough. The problem is the dollar has been so strong, and it really isn't pulling back. It has a couple days of consolidation where it's trading sideways and a minor little pullback, but the dollar just keeps really pushing higher, and I think investors are still more or less interested in stocks at this point. I don't think most of them are seeing the skies falling just yet. So we are seeing money move into the big brand name stocks still. And I think we're going to have to see some more damage done to the stock market before people start to shift and start searching for the next safe haven, and where investors stumble into precious metal miners as a safe haven in gold and silver. I think we need more fear in the market for that to happen. And so that's going to take, I think, a little while, and we're going to need probably some good bouts of selling in the market, in the stock market, in order to do that. So I think we're just seeing the precious metals, they've been dormant all year, slowly kind of losing value, the physical metals. And it's a good sign. That's a very bullish sign. When something completely falls out of favor and people forget about it, they leave it alone, there's no hype about it, that's when things are putting in a bottom. So they're going to come to life here, I think, very soon. Over the next couple of weeks, I think we'll see them start to perk up, and we could see a very nice rally later this year in precious metals.
Is it true when there's a market downturn, people sell their gold to pay off their margins, and then they restock in gold?
Yeah, I think that does happen. And, we saw this like back in 2008 when the market crashed. There really was no safe haven. Gold collapsed, silver, miners, everything sold down. There will be eventually, when we hit a bear market and positions hit certain thresholds for the average investing account, where brokerages around the world have to start liquidating to cover margin calls, everything gets dumped. Everything pretty much starts to sell off. The key is to get out before you've lost that much, and to not hold on to positions if you've got them, and wait, keep your money safe either take advantage of the falling market or stand back and simply wait for the market to correct, 30, 40, 50% before you start feeding money back in. And you want to have lots of gunpowder because gold and miners, they should do very well near the end of a bull market in equities. They will be under pressure in most cases during the bear market of stocks. They won't really act as a safe haven. They haven't really in the past. You need to wait for the margin calls, the panic selling, the forced selling to cleanse the market, and then you buy. You can move in when everything is discounted at an incredible rate.
We'll have more with Chris Vermeulen right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, copper earlier in the year was around, I think, $3.33, something like that. Now it's below the $3 mark. What's happening with copper?
Yeah, copper's had a very strong pullback the last month. Really, it's been 4 big down weeks in a row. It poked up into that 330 area. Now it's trading down at 291. It's testing a critical support level on the chart from back in mid 2017. And if it can't recover more or less from the price it's at now, by the end of the week, it could be very much so a technical breakdown, and it could be a top forming that we could see a much further collapse in price. We could see it drop all the way down to around the 260, 265 level from where we're at. So it's got potential to really continue its downward move. And if this is a top and it cannot recover over the next week here, then it could be lights out for copper, and we could see it really start a new potential downtrend.
What's behind this downturn?
I'm not too sure. I don't follow copper very closely. Typically, I just stick to the technicals, so I'm not too sure why it would be selling off so strong. It's just not something that I follow that close.
Could it be because it happened a few years ago? People started to stock up on copper and treating it like a speculation metal like gold.
It could be, yeah. I remember that for sure. Metals across the board. You remember when copper was back up in $4.50, and yeah, people were starting to look at your pennies in your pocket, and you're like, wow, this is worth more than a penny. I remember that very clearly. So maybe people are giving up on it right now. When you step back and you look at the monthly chart of copper, it is still very bullish at this point. On a monthly standpoint, it is at support, and it needs to hold for this month in order for it to really continue to be in this strong uptrend. Volume's been climbing very strong the last 6 months in copper, and there's been a lot of selling going on, but it's more or less still in a very strong bullish formation. And it's at the point here, again, even when you look at the daily chart or the weekly chart, we need to see a recovery here in the next couple weeks or this month from a long-term perspective. And if we do, it's actually set to go all the way back up to around 350, 375 very easily from this point. So it is at one of those critical junctions where it needs to find support here and bounce this month, or it's going to be going down to the 260, 250 area fairly quickly.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.